Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. Spot prices fluctuated higher than lower this week. Up to now, the spot prices of rebar and hot-rolled coil are flat week on week. Market sentiment remains stable, while overall trading activity has declined compared with last week. On the macro front, the US and Iran have sent out successive positive signals on negotiations. The market expects easing geopolitical tensions, leading to a sharp drop in crude oil prices. Last week, a gas explosion occurred at a coal mine in Qinyuan County, Shanxi Province, causing heavy casualties. All coal mines in Qinyuan County were shut down for safety inspections. To date, safety inspections in Qinyuan and surrounding areas are still underway, resulting in a week-on-week decline in coking coal output. On the supply side, total steel output edged up. The total output of the 5 major steel products stood at 8.6372 million tonnes this week, up 15,200 tonnes week on week. Meanwhile, molten iron production remained flat week on week. Given decent profits currently enjoyed by steel mills, molten iron output still has room for further growth. By product, rebar output was steady at 2.2167 million tonnes, rising by 5,300 tonnes week on week. Hot-rolled coil output decreased slightly to 2.9551 million tonnes, down 37,500 tonnes week on week. Demand remained sluggish. Apparent consumption of steel reached 8.7619 million tonnes this week, a week-on-week decrease of 43,900 tonnes. Specifically, apparent consumption of rebar was 2.3225 million tonnes, down 95,400 tonnes week on week, and that of hot-rolled coil was 2.9366 million tonnes, falling by 41,800 tonnes week on week. Driven by the price rally then slump trend this week, market participants hold a relatively pessimistic outlook and speculative demand has weakened. In terms of inventory, the destocking pace of the 5 major steel products continued to slow. Their total inventory registered 15.4444 million tonnes, down 124,700 tonnes week on week. Breakdown by product. Rebar inventory was 6.5471 million tonnes, a week-on-week reduction of 105,800 tonnes. Hot-rolled coil inventory stood at 4.1051 million tonnes, up 18,500 tonnes week-on-week. Overall, China's steel market trended weaker this week. Output posted a mild increase while demand fell week-on-week. And the destocking pace continued to slow, with the fundamental situation staying largely unchanged from the previous week. Rising raw material prices have squeezed steel mills' margins, yet their willingness to ramp up and resume production remains intact. As downstream sectors gradually enter the off-season, there is limited potential for a rebound in construction and procurement demand, bringing mounting underlying pressure to the supply-demand balance. Since steel prices dipped earlier this month, export orders for domestic steel have picked up week on week. External demand will help offset the weakness in domestic demand, keeping the steel market in a tight supply-demand balance in the short term. In addition, the coal mine accident has disrupted short-term coking coal supply, and raw material costs will provide solid support for steel prices. The market lacks sustained driving forces, and sentiment towards the future market is subdued. Nevertheless, tightened raw material supply will underpin steel prices. It is expected that steel prices will move sideways in the near term. Going forward, we will keep a close eye on inventory changes, as well as whether regulatory authorities will only rectify the involved mines or launch safety inspections across the region and the entire industry. Based on the above analysis, here is our operational suggestion. Purchase steel according to actual demand and properly control inventory risks. Institutional views hold that steel market fundamentals have weakened marginally, and the traditional peak season has entered its late stage. Increased rainfall in southern China is expected to weigh on demand, leaving little room for further fundamental improvement. Nonetheless, raw material prices will remain supported by ongoing safety inspections at domestic coal mines in the short term, and steel prices are forecast to fluctuate sideways. In summary, steel prices will generally stay in a volatile range. It is necessary to closely monitor the pace of inventory destocking and changes in domestic coking coal supply. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.